Hello and welcome to your May Investor Update. I'm Brad Holland, Director of Investment Strategy here at Nutmeg, and I'll be answering questions on the earnings reporting season and its impact on markets and recent changes to the Nutmeg portfolios, which have seen us neutralise our positioning in bonds. The earnings reporting season for the first quarter of the year began in mid-April, with the bulk of reports coming later in May, not in April. But the earnings growth was negative for the second consecutive quarter, although the declines were generally less than markets had anticipated, giving rise to positive surprises from the get-go. This followed on the heels of a really strong equity market recovery from the low point in March. So the tone of the equity market had already improved before the earnings reporting season began. Tech companies and large banks were among the early reporters to offer positive sales and profit surprises. And ironically, it was the failure of some smaller banks that led to some equity market volatility in the second half of the month, not the broader earnings season itself. Now, despite that, though, equity markets generally finished higher on the month, with the UK a particularly stronger performer. Bond markets had a more mixed time, with small positive gains in the US bonds and larger losses in UK government bonds. Unusually, the stronger UK large company returns came with a stronger currency, but the UK performance was across both large and smaller companies, indicating a broader re-rating of the UK markets. Yes, at the end of the month, we made a decision to neutralise the portfolio's positioning in government bonds. In other words, we are no longer underweight bonds versus our risk benchmarks, as we see better prospects ahead for the asset class. We've spoken before about how 2022 was a year to forget for the global bond market, as the world's major central banks raise interest rates in a bid to control inflation. And rising interest rates mean the value of bonds fall, which can inflict losses for those that invest in them, including Nutmeg portfolios. And Nutmeg portfolios have historically stayed underweight bonds amid the spillover effects of a decade of extreme policy actions. Most recently, governments lent support to bond markets during the COVID pandemic. However, as we move deeper into 2023, there are more encouraging signs for the global bond market itself, namely with evidence building that inflation may have peaked. US government bonds have been our first port of call, with the inflation outlook there seeming much clearer than in the UK. For example, policymakers at the US Federal Reserve expect core inflation to fall to 3.6% by end of this year and then to reach 2.1% by 2025, consistent with inflation starting to trend lower in the coming months. The US economy is now in the later stage of its monetary policy tightening cycle, with the bulk of the heavy lifting in interest rate rises already behind us. Though saying that, we still don't foresee a cut in rates later this year. We think that the recent issues impacting banking sector in the US has provided another reason for policymakers to tread carefully about raising rates further. The concern there is that if banks become more cautious about their balance sheets, they may tighten up their lending standards and do some of the central bank's job for them. Well, diversified multi-asset portfolios, such as those offered by Nutmeg, should hold healthy positions in both fixed income and equities. Along with a steady yield-based income, government bond assets typically offer investors a source of diversification, given they tend to be negatively correlated with global stock markets. While that wasn't the case in 2022, long-term history suggests that bonds can offer ballast in portfolios as a more stable, less risky asset class. With interest rates now back to attractive levels, investors are being better compensated for bond risks. And with more normal correlation with equities, the diversification factor of government bonds is once again effective. You can read more about the changes to the portfolios in a fresh blog posted on the Nutmegonomics section of our website. As always, thanks for watching, and we will continue to keep you updated via regular blogs, the monthly investor update, as well as the View from the Investment Desk videos. If you have any questions or suggestions for a topic you'd like us to discuss in next month's investor update, you can contact us via social media, email, or in the comments section below this video.